What's up, everyone? Today we're going to be talking about how to program your mind to be a successful trader. Because if you think about it, trading is just as much mental as it is actually going in there and doing analysis on stocks. So if you are not fully mentally prepared and have the emotional side of it down, you're not going to be successful. So pretty much what it comes down to, guys, is doing the opposite of what you feel like you should be doing when it comes to cutting losses and locking profits. So most traders will feel the need to lock their profits as soon as they see green and let their losers run, hoping that they recover and become winners eventually. The problem with this is when you lock in profits early, your profit margin gets cut in half, in third, in a tenth of what it could be if you let your winners run. And by doing the opposite, just letting your losers run and hoping they recover, you're letting those losers become even larger losers. And when they stack up to those wins that you're cutting short, it's going to outweigh the wins every single time. So what you need to be doing as a trader is reprogramming your mind. And it's a really tough thing to do, but once you get the feel for actually doing it, it'll be much easier. So what you need to do is let your winners run. So when you have a winner, let it run. And when you have a loser, identify it as soon as you possibly can and cut it. There's more value in cutting a loser quickly, even if it has the chance of becoming a winner later, than not cutting a loser and risking losing more. The biggest thing about this, guys, is that we want our trades to end in one of four ways: either a break-even trade, a small win, a small loss, or a large win. In this case, the break-evens are zero. The small wins and the small losses usually offset. And then the large wins, when you're letting your winners run, they are the ones that bring your portfolio to an overall profitable uptrend. So how do you identify a loser? Sometimes it's not even a loser at all. Sometimes the stock just does something that you don't understand. If you don't understand what a stock's doing, if you don't understand what's going on, cut the position. I don't care if it's red, green, or neutral, right? If you don't understand what it's doing, and you took the position because you thought you did understand, you're pretty much just gambling then. So that's the first step. Cut your losses when they're there. The second step, guys, is letting your winners run. And this is the hardest thing to do mentally, because as a trader, we're programmed when we see green, we want to take it. We want to take that green when we see it. But if there's possibility for more green, we have to be able to identify that and let our winner run. So here's what I do personally. So what I do is I set something called a mental trailing stop loss. So what that is a stop loss that will take your profits in sequentially increasing margins. So if you buy a stock at $100 and the stock goes up to $102, you've made 2% on that trade. What you could then do is say, hey, if the stock drops below $101, I am cutting it, taking my profits, right? Because at that point, you're up $2. And if you go back down $1, you're going to say, all right, let's just take the profits, cut the position, and we'll go on to the next one. If the stock then continues going up to, say, $104, you set your mental trailing stop at 103. And if the stock drops below 103, you cut it, you take your profits, right? Every time you move that stop loss up, the mental trailing stop, you're still taking your profits as it triggers, but you're still letting that stock grow for the possibility that it still has a ton left in the gas tank. This is going to do a couple things for you. One, it's going to allow you to cash in on much larger wins. If you're just cutting your profits every time you get to 1%, if your rule is 1% a day and every time you hit 1% a day, you cut it, you're never going to make 2%. You're never going to make 10%, right? We want to give ourselves the possibility to at least make that much. The other thing is when we're setting our mental trailing stop, we're guaranteeing profit, right? So if you set your stop loss at $101 and you bought at $100, you're never going to lose money on that trade. Even if you break even, even if the stock drops back down to your mental trailing stop, you will never lose money on that trade. Think of it as a free pass to see what the stock has in store for the future. So a really important way to test this, guys, is track your trades, journal your trades. If you want to get the spreadsheet that I use down below, click the link. It's free. Just download my PDF. But you need to keep track of what your profit is and what your loss is percentage-wise on every trade. And if you find that you're having losses that are like 3 to 10% and your profits are only 1 to 3%, then you really need to take this video to heart and you need to try and switch that mentality. Program your mind to be a green trader, not a red trader, right? So if we're locking our profits right away, we're not really giving ourselves that shot. I hope I earned your thumbs up in this video where I showed you how to program your mind to be a successful trader by cutting your losses quickly and letting your profits run. If you're new to the channel, please feel free to subscribe and I'll see you guys in the next video.